Welcome XDC fans. We're going to dive into some XDC news and information. We're going to go through a trade tech document that shows the future of crypto is very promising. Also, we're going to recap on what trade tech is and also check out a clip from the CEO of Securitize testifying in front of the House Financial Services Committee. If you're an XDC fan, you've come to the right spot. Please do hit the like and subscribe. Also share with friends and family, because the more people that learn about XDC, the more people can invest. First, let's recap on trade tech. There might be new listeners, new viewers who are getting familiar with XDC network. They might not know what it is, and it's good to recap anyway. So this older article is a great way to explain what trade tech is. So trade tech is a World Economic Forum member. They selected XDC network to launch traded tokens, the trade finance-backed fungible security tokens. The move is expected to deliver significant liquidity to the trade finance sector by securitizing a traditionally liquid asset class on the XDC network. So the collaboration represents the next evolution in the trade tech and XDC partnership, which first introduced the trade finance-based non-fungible tokens, or NFTs, for institutional investors in September of 2021. Like the traded token, the NFT offering used XDC's XDC network to transform trade finance assets into a non-fungible token, which trade tech repackaged and distributed to investors. By using fungible security tokens with concrete collateral, trade tech begins the process of ramping up on-chain transaction volume of regulated real-world assets and extends access to the trade finance market to both retail and institutional investors. The Trade launch signals blockchain's adoption in a regulated arena. It positions the XDC network as a way to connect real-world finance origination with DeFi markets, confirming a number of reports by Deloitte, JP Morgan, and CoinDesk that foresee a wave of tokenized assets on the blockchain in the years to come. All right, we recapped on trade tech. Let's recap on Securitize. What is Securitize doing? Securitize is making real-world assets available to investors through tokenization, a process that registers ownership rights on the blockchain. This is going to connect Securitize's relationship with BlackRock. So XDC has been trusted by a wide range of platforms and established industry leaders in traditional finance. BlackRock's recent tokenized U.S. Treasury, for example, uses Securitize, which lists XDC network in its top 4 supported networks. More directly, XDC network established a joint unit with Japan's SBI Group to develop and deploy innovative solutions provided by the XDC network. The CEO of Securitize, Carlos Domingo, testified in front of the House Financial Service Committee. He encouraged Congress to adopt real-world asset tokenization, or RWA tokenization, regulations that support U.S. innovation. Securitize is a leader in tokenizing real-world assets. They're driving the compliant digitization of financial assets through the next generation of blockchain technology. Let's check out this clip.
I founded Securitize 7 years ago with the vision to provide a regulated path for companies to tokenize their financial assets and issue, sell, and trade securities on the blockchain to modernize capital markets. Tokenization obviously provides a much more efficient way of managing the underlying securities of a fund. It provides automation for things like redemptions, dividend payouts, etc., that can lower the cost of actually maintaining a fund. Typically, dividends are delayed into reaching the hands of the investors after the company has basically transfer those to the transfer agent, and transfer agent tend to hold the dividends for as long as they can to try to monetize on the asset not being transferred to investors. And I think this technology can improve how money is redeploying their assets and get better returns.
Now that you have a better understanding of trade tech, I want to dive into this document by trade tech, Digital Assets, so we have a better understanding of what's going on in the industry. From crypto adoption to tokenized future, exploring blockchain's impact on asset management and traditional finance. In Q2 of 2024, WBR Insights surveyed 100 of the most senior figures working in digital assets. These included chief investment officers, head of trading, portfolio managers, and other executives. Participants shared their insights on the industry-wide challenges they face and the innovative solutions they are bringing to the table. Here are some significant key findings. Allocation. So cryptocurrency is on the rise and firms are already allocating a significant proportion of their portfolios accordingly. The majority of their respondents, 35%, have allocated between 11 to 20% of their portfolios to crypto. Meanwhile, just one respondent said that they are yet to allocate any of their portfolios. Interestingly, many believe this trend will increase over the next 12 months, indicating significant industry change is on the horizon. And I see that. Chain reactions. Blockchain technology is being embraced across the board. Respondents believe it can benefit many areas of traditional finance operations, including smart contracts and automation, 79%, and regulatory compliance, 64%. While adoption is growing, there are challenges to overcome, specifically a talent gap in the blockchain space and internal resistance from stakeholders could act as roadblocks on the path to mainstream integration. Token-hearted. The tokenization of securities and funds is gaining significant traction. 71% of respondents are either already tokenizing or looking to tokenize hedge funds. While their research suggests the majority might be looking to tokenize hedge funds, the overall interest is highly positive. Fixed income securities are also a target for tokenization, with 54% actively involved and 51% looking for private equity. Not a single respondent said that they were not looking to tokenize securities or funds. That's massive. Breaking with tradition. The digitization of traditional asset classes is in full swing, with 50% of respondents already responding partial implementation, while 7% already considered their digitization process to be fully implemented. All respondents recognize its potential. Many are doing so because it improves transparency, 64%, and allows for enhanced market access, 63%. However, hurdles remain, and firms face barriers to their digitization efforts, including security concerns, 61%, privacy and data protection, 57%, and scalability issues, 57%. Investing in the future, asset manager adoption of crypto. Asset management appears to be undergoing a notable shift as cryptocurrencies gain significant traction among firms. While these technologies may seem to many like recent innovation, they have been around for more than 15 years, and this reflected in the response to our survey, with almost all of them, 99%, allocating at least a portion of their portfolio to cryptocurrencies. The extent of these allocations might come as a surprise to some. The majority of respondents, 35%, allocate between 11% and 20% of their portfolios to crypto assets, while a noteworthy 5% have already committed 30% or more. Our research suggests this upward trajectory is likely to continue, potentially ushering in a new era of mainstream institutional crypto adoption. However, the path to full-scale adoption is not without its challenges. Talent shortages were a major concern for many respondents, hindering broader integration of crypto and blockchain technology. Wider adoption hinges on several other factors, including access to the right resources, buy-in from key stakeholders, and perhaps most importantly, a clear regulatory framework. The initial allure of crypto for retail investors stemmed from their decentralized nature, operating outside the control of traditional regulatory bodies. Ultimately, this lack of a robust framework has hindered the commercial viability of crypto. However, the tide may be turning. Regulatory bodies worldwide are starting to engage with crypto technology. As one of the speakers at our Digital Assets event aptly stated, we are witnessing a potentially historic moment where institutions and regulators increasingly work towards a shared goal. That's important right there. Recognizing the growing importance of data-driven insights, we also explored how firms are incorporating digital assets or digital asset data analytics into their strategic and decision-making processes. Encouragingly, 47% are already doing so, albeit to a limited extent. This suggests a strong willingness to adopt these tools, and a significant portion, 34%, plan to initiate plans within the next 12 months. Only a negligible 3% express no plans to incorporate digital asset data in a foreseeable future. I want to stop right there. That is going to change, including a growing recognition of data as a critical driver for informed investment decisions in the digital asset space. The appetite for crypto assets is undeniable, and the landscape is being reshaped by maturing regulatory environment and a focus on data-driven decision-making. This potent combination paves the way for a significant shift in institutional adoption, while the coming years revealing the very true potential of cryptocurrencies as a mainstream asset class. If you would like to read through this, the link is in the description. I'm going to end with this from Son White of XDC Network Australia. 2 little known facts. XDC Network is one of the few blockchains integrated with USA's premier regulated asset tokenization platforms, Securitize, and Securitize joined a special fintech working group under the auspices of the International Trade and Forfeiting Association, ITFA Worldwide, earlier this year. It's worth noting XDC Network is a member and active participant of the same TFD initiative working group since 2021. Further, let it be clear, XDC Network is the first and only blockchain to be included at this granular industry level for global enterprise and trade, a leader in all ways for tokenizing digital docs and finance. Now with Securitize on deck at the ITFA FinTech for issuing regulated securities, to be a fly on the wall, not privy to any details, but it's looking like the birth of a true digital economy to me. Now is the time to purchase that D'CENT hardware wallet. Through Token Topics affiliate links, you can receive an incredible discount. The purchasing links are in the description. If you're looking for a safe wallet to store your XRP, your Quant, your HBAR, XDC, and other great assets, look no further. Again, the purchasing links are in the description.